Hey guys, good morning to everybody. Thank you so much for joining me for another episode of Breaking Bitcoin here with your morning market update. I am, of course, Justin Wise, lead analyst at Cryptocurrencies. So, hope you guys are doing fantastic. It is, of course, Tuesday, January the 15th, 2019. Man, you guys ever have that thing where it's the new year and you're commonly writing the wrong year? You know, you're writing a check or you're filling out a form and you're writing, January 15th, 2018. You're like, oh crap, it's 2019. I've been having that. It's just interesting to be in the new year. Some fresh snow falling down outside my window that I do see. I'm going to have to go ahead and get out there with the shovel a little bit later on. No older kids to help me out today, unfortunately. So I guess the burden is all upon myself. That's all right. Honestly, the way that everything is going right now, I kind of expect today to be, for me anyways, a calm, kind of a lazy day. It's a Tuesday. Got a bulk of work done yesterday. Still preparing for the presentation in Brookfield, Wisconsin this Saturday. Again, I'll be leaving on Friday, so looking forward to doing that and looking forward to kind of seeing everybody there in the circuit. Let's see. As far as my positions go, nothing has changed. Still with an average entry of 35.30 on my XBT USD long. Still hedged. Let's see here. Let's go over actually to XBT H19, which is actually what I have open right now. Still hedged with an average entry of 35.80. So sitting good. Both positions in profit. I don't have any indications to close one or the other. As we'll see here in a little bit, we have some conflicting indicators looking at our underlying data, the bid-ask sum, our market depth ratio, and our longs and shorts ratios. So when I see conflicting data metrics in a ranging price, I like to stay hedged. Took a few stabs at a few positions last night. Took a quick trade on Mana. Pretty much shot up right to where I wanted it to very quickly. Was able to really scalp, very short-term scalp that for about 1.7%. Did not go up as high as I wanted it to. I was trading a channel. It came down fairly quickly, though, this morning, as did everything. So big declines kind of across the board. Wiped out a lot of people that were entering on bullish optimism into altcoin positions. And these things happen. Again, as I've said many times, you do have to take the larger picture into account. So let's look at the larger picture. Let's go ahead and go on over to Mr. Bitcoin. And let's go ahead and just take these drawings off the chart and let's just zoom out here a little bit. All right, so as I said yesterday, looking at the higher time frames, the weekly and the daily, what do we see? We don't see a strong trend, guys. Just to put this in the simplest terms, for people who are confused about the market, because I've seen this on Twitter, I've seen this in the Discord, I've seen this in a lot of places, and it's something that I really, that you shouldn't get overly concerned about if you understand what you're looking at. What you're looking at is a range-bound market with a downward impetus stuck between 4K and 3K. That's it. It's that simple. And once you adopt that understanding and knowledge, it makes your anxiety about trades much less. Excuse me. Pardon my grammar. So, for example, as I've said earlier, we have a descending trend line. We have an overall downward bias. The overall dominant trend is to the downside. We are still in a strong bear market, but we're not trending strongly in one direction or the other. And until a key support gets taken out or until a key resistance gets taken out, we stay in range-bound mode. In range-bound mode, your oscillators are going to be your best friend, and trading is risky. Range-bound markets terrify a lot of people. And for good reasons, because People get whipsawed. They're not sure exactly where to enter support. They're not exactly sure where to take profits at resistance. My general advice is this: when you are in a range-bound market with a downward impetus, if you're going to take a trade to the long side, you need to be extremely tentative about it. You need to make sure that your as always, risk management is the most important factor to profitable trading, especially if if you want to be doing this for longer than a month. If you want to still be here after a bear market, if you still want to be here after a downturn, if you don't want to wipe out your portfolio with a couple of poor decisions, then you need to make sure that you're practicing good risk management. That is the difference between long-term traders and short-term traders who get lucky, make some money, and then end up giving it all back to the market. It's just risk management, guys. So when you have a range-bound market, if you're going to take a position to the long side, you need to make sure that you're doing it very tentatively, that you're being very careful and very cautious with that trade, with that position. So that means that having short-term targets. So instead of measuring, for example, if you're using something like Fibonacci to use take profit targets, if you're using something like the volume profile to set take profit targets, you want to underestimate and also make sure that your stop loss is not at your secondary support, not at your tertiary support. You probably want to have your stop loss under your primary support because, again, range-bound market, the price has a tendency to go either way and whipsaw traders frequently out of positions. However, if the impetus is to the downside, you need to be more cautious with your long side trades. With your short side trades, the trend is in your favor. However, again, you do need to be cautious because of the range-bound nature of the market. Very easy to get whipsawed, very easy to get wicked out of your position, especially if you're trading on a platform that is prolific with its wickage, such as BitMEX. But overall, when the trend has an impetus to the downside, then you are going to be more safer in your short-term trades. That's why I do think, and again, I don't understand why anybody. Again, I've gotten a few comments in the comment section. And guys, I respond to comments, so please, again, as always, leave comments in the comment section. I love to hear what you guys think about technical analysis, about trading. But I get comments in the comment section, and people are like, hedging, why would you be long and short at the same time? That makes no sense, blah, 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 blah. It's just funny, man. It's just the things that you hear retail traders say when they haven't actively managed money, when they don't have a lot of knowledge about wealth management, when they're fairly new to trading. And by new to trading, I mean doing it for less than a year or two, honestly. Sorry, let me get a little coffee. Got a big pot of coffee on this morning, guys. We're ready to do this. The reality of the situation is that when you are in a range-bound market or when you're in a situation like this, hedging is a great strategy. You're looking for opportunities. You're looking to add to your short positions on rallies. You're looking to add to your long positions on dips. And you're waiting for key resistance or support to be broken, at which point you exit your unprofitable trade and start scaling into your profitable trade. And that strategy over the long term is what larger hedge funds do. This is what larger institutions do. This is how institutions manage money. They are hedged. They are long and short simultaneously, often on opposing contracts, often taking advantage of options, often taking advantage of other trading instruments to hedge their risk with a diversified portfolio. This is how professionals manage money. And if you want to have the longevity of institutions, of hedge funds, of professional traders, then you need to adopt some of their strategies. Now, that's not to say that you can be a gambler, rambler, trading man, as I've been for a decade pretty much. But as I've accrued more capital, as I've accrued more wealth, I have learned that the key point is preserving that wealth, preserving that capital. And now that I have enough capital to worry about, really, I don't need to be so risky with trading it. So let's get to the chat just a little bit. I do want to thank some of the subscribers that I didn't get a chance to get to yesterday. So thank you so much. A bunch of them. Hold on a second. Namanja, McPain, Mahmoud Sharif, the newest subscriber there. That is going to be very difficult for me to pronounce, but Mr. or Mrs. Ronan, thank you so much for the subscriptions on YouTube, guys. Highly appreciate it. Welcome to the community. Very pleased to meet you. If we go on over to some updates on Twitch, I do want to thank, just a second while the page loads. I do want to thank Mr. Anthony Choles 23, thank you. And Krug Ka for the follows on Twitch, guys. Thank you so much. All right, getting to the chat here real quick. Good morning to you guys. D7 Tom, Tori Ferrano. Thank you. Hey, Podnuts, what's going on, my friend? Scott, as always, getting the chat going. Gabe Anderson, hey, what's going on, man? Hey, yeah, Gabe Anderson, I just saw that. Actually, it was a tweet by Hero or Huto or something on Twitter, came up in my feed, and I clicked on the article. It is a new article, but that's old news, man. That's like really, really, really old news. Like, U.S. accounts have not, BitMEX has been not allowing U.S. accounts for a very long time. And also, they've been pushing out the Quebecois accounts. So if you're in Quebec, Canada, BitMEX doesn't want you. Julage94 says the market's crazy. No, not at all, man. Or ma'am. The market is not crazy whatsoever. The market's doing exactly what it should. Goddamn lifestyle combat. Drinking wine out of a Pringles can and an electric scooter riding in the Walmart parking lot. Yeah, for sure, man. Gabe Anderson. Yes, most likely. I shorted $27 or $27.70. Is that? I'm not sure what you mean. $27.70. Are you talking about GBTC? Johnny Ace. Hey, what's going on, man? Ben Joseph, Stephen Caruso. Yeah, we'll take a look at Trex, man. Hey, Nitin, how we doing, man? Jake Rezio. Johnny Ace, that's a great question. So it depends on what your time frame is. So honestly, if you are trading this, if you're trading the entire range and you're managing your portfolio based on this range, then my strategy would be to use average true range. I would project an average true range above the swing high and below the swing low. Those would be my stop losses. Then I would plot the entire range and look at key support and resistance levels, find the confluence that those have with high volume nodes. Also, I'd like to see confluence with Fibonacci levels based on the entire range. And those are going to be the levels that I'm going to be adding to positions. That's if you're trading the entire range. And that is an institution. That's a hedge fund strategy. That is a hedging strategy. So you're looking at every key level to add to your position. Now, alternatively, if you want to take a more trader-centric approach to that, you would basically be looking at situations of resistance and support to scale out of a position one way or the other. So, for example, right now it would seem that the market is trending downwards. So you would be looking for breaks of support to exit long positions and scale in, move that over into a short position. Now, the drawdown to this is that in the range, while you trade inside the range, you are going to be in drawdown. You're going to be net drawdown. But when the range breaks, because you've scaled into a long position as the market was trending up, and because you've scaled into a short position as the market was trending down, you are prepared for that break of support and you recoup losses. And so you recover your drawdown and you are primed for the volatile movement to the downside. Lifestyle Combat, man, thank you so much for the $10 super chat. Thank you so much, man. Highly appreciated. Thanks for the support. He asks, do you calculate your total profit percentage by your total account or an average on what you risk each trade? So let me see here. If you're asking about my tracking sheet, that is going to be calculated by the profit from each trade. So one thing that I've been thinking about doing to make things a little clearer when I do the updates for the tracking sheet. So let me give you an example of that. Let's actually go to that. Here we go. So here is the tracking sheet for January 2019. This is where I track all my trades. As you can see, week 2, we just closed out. Now, keep in mind, this is all unleveraged. I don't do, I've done that previously. It's kind of a marketing trick, I'm not going to lie. But if you reduce that as well, so basically we have included margin gain. So this is unleveraged. This is all actual P&L based off the position size profit. So for NEO, for example, let's just look at NEO. So for the position size that you would have entered with NEO, you would have made 17.95% on the capital that you put into the trade. For this XBT USD trade, this is a leveraged trade most likely because it's on a leveraged platform. So there's 3.35% profit on that trade. That is going to be your position size profit. The actual reflection of the capital that you implemented into the trade is going to be larger than that. So your margin gain, so the capital that you put into this trade would actually be multiplied by your leverage that you used, your ROE. So for example, if you were using 5x leverage, that means that you would have actually made somewhere in the neighborhood of 17%. Because you would have to multiply your position size profit by your actual leverage trade. So I do want this to be more reflective of actual position size profit and not artificially inflate the numbers. And so this is actual unleveraged, unmargin gained actual position size profit. So one thing that I've been doing is, as I talk about in my webinars, I use 3% as my risk level. So for any trade that I am entering, I am calculating that if my stop loss gets hit, I am going to lose no more, the maximum of 3% of my portfolio. That's the maximum that I will risk for each trade. Now, that doesn't mean that I always risk the maximum for each trade, because I do calculate what position size I should be trading based upon my portfolio, based upon my risk level. So in actual dollar terms. So for example, if you have a $5,000 portfolio, 3% of $5,000 is $150. So $150 is going to be your basis for calculating your position size. You take your position size divided by the distance to your stop in decimal form. So if the distance to your stop is 2%, that's 0.02. Take 150 divided by 0.02. That's your correct position size. Now, there are going to be many times when I do not want to trade that large of a position size on something like Binance. If I'm trading a Bitcoin pairing, if I'm trading a USDT pairing, I prefer to keep the larger position sizes on a separate platform, something like BitMEX, Deribit, or Kraken. So that means that I'll be trading a smaller position size. That means that I will adjust my position size down. I won't really adjust my stop loss, because stop losses should never be arbitrary. Stop losses should not be calculated based on your loss. Stop losses should be calculated based on the technicals, and the position size and the quantity that you're going to lose is going to be based off that. The wider your stop, the smaller the position size. The tighter your stop, the larger your position size. It's all dynamic. But one thing that I have been thinking about doing is making like a mock portfolio so that people could actually see in dollar terms what the P&L would be for a template portfolio trading my strategy. So let me just reread your question and see if hopefully I answered that. If I did not, let me know. And as far as a general rule of thumb, I don't look at the profitability of an individual trade in the long term for determining whether my strategy is profitable or not. I use my equity curve over time. So I analyze my equity curve once a month. So I do a deep analysis of my actual dollar term profit, my actual BTC holding profit, and I just measure my equity curve. If my equity curve is going up, then I'm profitable, and I take an average calculation of my equity curve over the last 8 years that I've been profitable as a trader, really over the last 10 years. But I find that the first 2 years of my equity curve that I do have charted is kind of not reflective of my results now. The first 2 years of trading, as I've talked about again, kind of rough for me. I'm a very stubborn person, and I'm kind of a slow learner. But when I do learn something, locked in. Hopefully. I mean, I'm always trying to improve. That's why I surround myself with other traders that are profitable. I surround myself with traders that challenge me. I surround myself with subscribers that ask me questions and are on my ass if I make a mistake. It pushes me to be better and do better. And hopefully that is what I do. So yeah, the most important thing is going to be your equity curve and your risk management as far as profitable trading. Jake Rezio, could you talk about how long it took for you to realize we were entering a bear market after Bitcoin reached all-time highs? What were the indications? So this is a good question. This is something that I get a lot. So your key indication, at least your first indication, would have been, honestly, almost immediately. So when Bitcoin dropped 42% in an extremely short period, that is some significant sell pressure. And when you make a lower high, that is classically an indication that you have exited the uptrend and begun and have entered into a downtrend. There are lots of other ways that you could have done this. You could have been looking for Kumo cloud breaks to the downside, for example. Let's see when that would have given you the indication. So that was personally for me just based upon classical trading. Saw the big decline. I saw that huge 52% drop. And when you see a huge volatile drop like that, you know that you're going to get a reaction to the upside. So, I mean, that's without question. Once the sellers have been exhausted, I mean, sellers can only push the market down so far. And when the bears push the market down for a good week like that, almost 50%, you're going to get a significant rebound on that. So let's actually take a fib retracement of that swing high to that swing low. So looking at fib retracements, what you can see is that you're not able to get above your 786 Fibonacci retracement. So that's something that you would keep on your charts, and you would be looking for a break above to re-entering the bullish trend. You can look at that as a 618, but again, when you have a violent move downward and you're measuring a fib retracement from your top to your bottom, you're looking at resistance. You're looking at areas to enter into a short if you're looking at it for position entries. You're not able to close above your 786. You're not really able to close above resistance right here. You form a lower high, and then you come back down and break support that you had put in on this recent uptrend. So this is a bullish sign when you put in a low, and then you put in a higher low, and then you break resistance right here. That's a bullish call sign. But that's invalidated very quickly 3 days later. And then you break here. Your point of control at that point in time was right here. You break below the point of control. You consolidate and you break below support. So the clearest indications would have been when Bitcoin was going below 12K if you were waiting for full confirmation, which I know unfortunately didn't serve a lot of people who entered in the parabolic rise, as I know a lot of people did. I started trading cryptocurrency at the beginning of 2016. I remember I remember very clearly when I purchased my first Bitcoins in March of 2016. So I had heard about Bitcoin before. I had actually been sent some Bitcoin before 2016. I lost it. I don't have access to it. I regret that. It is what it is. But I became interested in trading cryptocurrency in 2016. I had read the white paper previously, but I hadn't really gotten into it. And then I met a good friend who was really passionate about cryptocurrency. Actually works as a developer, not for Bitcoin Core or anything like that. Oh shit! I see, man. My bad, guys. My bad, guys. Yeah, sometimes I get in the zone. Sorry, guys. All right, so Jake, I'm going to continue on with that in just 1 second. Johnny Ace, thanks, man. What's my thoughts, predictions on BAT? I like BAT, so fundamentally, I'm quite bullish on it. Let me write that down. I'll take a look at the charts. DMOBA, do I trade on Finex? No, I kind of wish I did, but I can't, so I won't. Hey, Ottawad. Hey, what's going on? I don't know if I ever pronounce your name right, because it's like a number salad, a letter salad. But yeah, I'll look at Link. Link gives no fucks about the bear market. Yeah, Purple Fireworks. Hey, what's going on, man? Yeah, you make a good point. Social indicators as well as media hype, really over irrational exuberance. You start seeing people posting like 25K Bitcoin, 50K Bitcoin, 100K Bitcoin by the end of the year. It's a pretty good time to sell. Technically, the indications, you get a huge volume spike right here. Again, for me, you do have to trade. You do have to trade the right way. So it's very hard to catch the exact tops and bottoms of parabolic movements. Again, you can use those fear and greed indexes, or the Meyer multiple was a great. The NVT signal was, excuse me, not the Meyer multiple, but the NVT was a great indicator. It's caught every top and bottom in Bitcoin's history. Not everyone, but whatever. Some analysts are fond of saying that, but it's a good indicator. It's a good leading indicator. But really the confirmation for me was when you're not able to get above that 786, you're in a parabolic movement, you have a huge retrace on volume. This is your warning sign right here. And then you post a higher low. So somewhere around this area was the indication. So I believe I made my first, I exited my first holdings of Bitcoin at around 15.8K. And then I was out, I exited the rest, excuse me, I exited the rest of my position around 13. And then I was fully out of the market at 11 and a half. And then I didn't actually, so that's for spot price, though that's not considering what I already had on derivatives platforms. Because unlike most people, I didn't discover derivatives platforms at 5.5K. It's crazy the way the market works, man. It's like people only learn that they can long like right here, you know? It's like retail only learns that they can long right here. And then retail only learns that they can short like right here. It's not the time for long-term directional positions, guys. The time for that has passed. Right now, you're range bound and you have to play the range until the range breaks. And then the trend becomes your friend. But there is no strong trend right now. Hey, Christian Devick, what's going on, man? Hey, AJ, what's going on, bro? You guys are just going crazy like, ah! Minor, yeah, minor detail. Yeah, and here's the reality of the situation is that, so that, again, that's a question that I get asked a lot is man, how do you know like when to sell the top? Well, I mean, you often don't, man. It's very difficult. There's a lot of things that you can do. Fibonacci extensions are going to help you out a lot. So you could have measured the last swing, and so let's get in here. So there you go. There's a Fibonacci extension. So all you're doing in this example is measuring the last swing movement. So swing highs or swing low to swing high, and using Fibonacci extensions. In this case, I'm using negative Fibonacci extensions, and there you have your potential take profit targets of a parabolic movement. This is the, in my opinion, this is the best system for looking at parabolic movements and looking at take profit targets as well. Because you're never exactly sure how high a parabolic movement's going to go, and you're not exactly sure when it's going to end, honestly. All you can do is wait for confirmation. So here's the reality of the situation, and this is as a trader who profitably traded the last bull market. Nobody knew. Nobody knew. Everybody wants to say that they knew in hindsight, but the reality is I've been trading stocks, I've been trading options, I've traded Forex, I've traded cryptocurrency for over 2 years now. And the reality of the situation is that nobody knows. Everybody points to indicators in hindsight and says, well, clearly when the blah, blah, blah crossed the blah, 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 you should have exited the market. Anybody who was looking to catch the top on this, very few people got this. Very few people got this. And there's very few strategies that are going to let you capture an entire market. Again, as I just plotted out for you, a Fibonacci extension would have done quite well for you at profit-taking targets. So if you were accumulating anywhere between 2016 and 2017, and you see the swing movement, you could have even done the same thing on this swing movement right here, and you're just applying higher extensions, and you're just looking at your 1.618, your 2.618, 3.618, 4.618, 5.618, whatever. Those are your profit-taking levels, and if you see a retracement from those levels, 618 retracement, a 50% retracement, you're looking to restock on your position. But as far as trading, a lot of trading is going to revolve around not capturing an entire market cycle, not putting in, So there's long-term trading, there's short-term trading. So there's trend trading, which again, if you were trend trading this, it doesn't matter if you use moving averages, it doesn't matter if you use Ichimoku, it doesn't matter if you use whatever technical indicators that you use. There was no confirmation to exit this trade until right around these levels. Again, I talked about it. We come down, form a lower low or form a lower high, and then we break support. That is a clear indication that the parabolic cycle has ended. So, and that's around $12,500, $13,000. So capturing the top, unless you're lucky, highly unlikely. But let's look at the important thing. So everybody's focused on this, what, 40, 50%? Why are individuals not focused on the 2,500%? Looks like you captured a good majority of the market there. Just correct me if I'm wrong. Show up to the party early, or show up to the party late, guys, and leave early. Eat the body, leave the heads and the tails for risk takers and gamblers. Hard fork. Yeah, I get asked that question a lot too, man, about the Ethereum hard fork. I think that if anything, I would think that the Ethereum hard fork news would actually have a negative impact, because if people, and again, it's because people don't really understand what the hard fork is or what's going to happen. There's no new coins, there's no split, or excuse me, there's no airdrop, there's no free money. In fact, I mean, the thing is risky, man. Like, and this is just my personal opinion, but technically, like, Ethereum is kind of a beautiful disaster. It's a science experiment project. I think that it is going to be profitable because I do think it has a use case, but I don't think it is what it purports to be. I don't think that it is a competitor to Bitcoin in any way, shape, or form. I think that Bitcoin actually does have the potential to be fundamentally world-changing. Ethereum does have the potential to be a powerful tool, but not in the same aspect that Bitcoin does overall. Hold on a second. Just let me refresh my shit. All right. And here's the reality of the situation is we could see a hard fork, or excuse me, we could see a chain split. If a majority of the miners do not opt to adopt Constantinople, which they have the full right to do, guys, remember that cryptocurrency is decentralized. In cryptocurrency, individuals are sovereign. So developers can choose to write any code they want. Nodes can choose to run any code they want. Or, excuse me, nodes can choose to communicate to whomever they want. Miners can choose to run whatever code they want. Individuals can buy whatever coins they want and use whatever wallet they want and use whatever chain they want. Remember that individuals are sovereign. So the Ethereum Foundation cannot force miners to upgrade to Constantinople. And only, as far as the reports have gone, as far as the published reports, only 15% of miners have said that they are going to adopt the Constantinople hard fork. All right. Now, according to the Ethereum Foundation, they're like, no, those numbers aren't accurate. We've got it on good words, man. All the miners, they texted us, guys. They texted Buterin and they were like, yo, bro, we're good, man. We're in. But the official reports from the mining pools say that only about 15% of miners have actually adopted the Constantinople hard fork. So I would actually, from a fundamental technical standpoint, I would actually expect the hard fork to have a negative impact on price. But Ethereum has rallied just as the rest of the cryptocurrency markets have done. I don't really think this was based on the hard fork at all. I think a lot of people like look into the news to breathe life into why the market is moving. Again, as a famous man once said, show me the charts and I'll tell you what the news is. So I don't think that the fact that Ethereum was getting some kind of I've read about the Constantinople upgrade. And again, I guess we haven't really talked about this, but if you guys go, let me switch over here. So you're not going to be able to find an accurate countdown for the Constantinople hard fork anywhere online. It's not on the Ethereum website. It's not on the coin market cap. Nobody knows. When is the exact time that it's actually going to happen? Well, guess where you can find an accurate countdown to the Constantinople hard fork? You can find it on KrakenCryptocurrency.com, guys. KrakenCryptocurrency.com. Go over here to extras. Go to fork countdowns, Ethereum Constantinople. We will actually be counting down the block. So our dev actually has written this code, which actually takes block weight and size into account, and it will accurately count down to the exact second. So you guys go check that out. Make sure you tell your friends, your family, people you don't even like, whatever. Just we've done this in the past. We did this for the Ether Classic Callisto hard fork, the Oyster Pearl Shell, Monero to Monero V. This information is not available anywhere. We wrote this code in-house. So I should have been talking about that more. Should have been really doing a lot more about it. But I've been really busy with other things, man. So if you guys want to watch the ticker, guys, go check that out. It is on our website, KrakenCryptocurrency.com. Extras, fork countdowns, Ethereum Constantinople. Hey, Robbie, what's going on? When Moon? When backed? Change the channel name to Bitcoin Blinders. Hey, when Bitcoin stops moving the market and stops being the strongest cryptocurrency, yeah. Johnny Ace asks, how do we get the negative fib levels? You just put a minus sign in front of the levels. So 23638. Here's my fib setup. I changed it a little bit, as you guys see, but because normally I don't have this stuff in. Normally don't have that stuff activated. But I use 0, 236, 382, 0.5, 618, 786, 886, and then negatives as well. Negative 236, 382, 05, 618, 786, negative 1. And then 272, 414, negative 272, negative 414. Those are my fib settings. Sometimes it gets cluttered. Again, I have different settings for fibs depending on what levels that I'm looking at, and you can actually save those in under templates. So I have a couple different ones. The ones that I use the most are going to be that one and then that one. This is one I use a lot as well. This is just your standard fib retracement. I use that a lot for entries or take profit targets. Oh, the red star was my short channel. Xantimus Crypto. Hey, what's going on, man? Do you use the ladder buy and sell function? So I do ladder my buys, not every single time, but yeah, I ladder my buys and I ladder my sells. I don't use any function for it. That's just my strategy. Hey, Carrie, what's going on? So do I use Bitcoin dominance on TradingView to see how alts will perform? Yeah, I've tried that out, man. I've tried that out, but sorry, I was just laughing about something I saw. But I find that it's better to just look at the total market cap, and you're going to be able to see what coin's going to perform. I mean, you're going to get to me, this is what I've noticed. Okay, this is how I trade. When Bitcoin is moving sideways, alts are going to pump. When Bitcoin's trending down, alts are going to trend down. And when Bitcoin's trending up, alts are going to trend up. So there are key times to be looking for altcoin trades. You want to be looking for your entries when Bitcoin is trading sideways. That is when altcoins are going to pop off, except for Link, which doesn't seem to give, Bitcoin doesn't give a fuck about the bear market, man. Okay, so we'll check out XRP, man. BTC buyer, listen, yeah, everybody gets excited about the CBOE expiry. They have no effect on price. That is relative to anything, man. Hey, Ottawa, yeah, why aren't they shilling Link, man? If anybody knew anything, they know that Link's going to be the future. All right, so sorry guys, I've been talking about a lot of stuff. Let's actually, 40 minutes into the show, let's do some technical analysis. We're going to do Bitcoin. We're going to do Ethereum, Ripple, Link, and then basic attention token. So let's break into it. All right, Bitcoin. Nothing's really happened. Let's start on the weekly chart. Nothing's really changed on the weekly chart. As I said, need to start seeing, we've traded up. We've almost traded up there. We've actually pierced that. Hold on a second. So here's the Fibonacci retracement from the swing low to the swing high of the recent swing movement. Pulled back to that 618 Fibonacci retracement, closed below it, immediately rallied above it, and currently getting rejection from the 50% weekly Fibonacci retracement as well. If we take a look at our volume profile, again, we popped back down into an area of liquidity. Also, the high of the previous bearish candle, which was marking support for us on the weekly basis. Found support here, broke down through here, immediately retraced right here. So the weekly candle, fairly weak so far. Again, it's only been open 3 days. We'll see how the rest of the week plays out. If we're not able to get above a 50% retrace of this candle right here, so let's actually take a measurement. So that's going to be 37.94. If we're not able to get above 37.94 on a weekly basis, then we're most likely going to continue to the downside on the lower time frames, and we look to find support around that $3,100 area. Again, more than likely we do end up wicking through on an intraday basis or on a daily basis. Probably we don't. More than likely, I don't see us closing the weekly below this level right now. A lot of liquidity in this area. So as we do wick down to that level, then I fully expect another rally. So when you get a secondary touch of support, when you get a tertiary touch of support, you're often going to see strong plays. And the strength of those plays are going to be measured by whatever the market decides to do. So all you can do as a trader is determine your entry and exit points. The market's to determine if you're profitable, if you're not profitable. You know, I saw a good post the other day, and this is a great point. So 5 things can happen when you enter into a trade. You can break even. You can make a small profit. You can take a small loss. You can make a big profit, or you can make a big loss. All right. So if you eliminate making a big loss, you're light years ahead of the competition, guys. If you reduce your options to break even, small profit, small loss, big win, and big losses off the table, you're doing fine, guys. You're doing fine. Again, you guys, I showed my profit sheet, guys. Like, there's some red in there, man. It's not like I win every trade I take. Jesus. I took 40 trades last week, 29 profitable, 10 losers, 1 break even. Over 100% P&L. You're going to take small losses on the way to get wins, man. You're going to take small losses on the way to get wins. And that's not all me. You know, again, the team at Kraken Cryptocurrency is the best team that I've ever worked with. Again, we've got some great traders, great analysts, great contributors, and we continue to get better every day. So very excited to do my job. Very excited to wake up every day and work with this fantastic group of individuals. And I like doing the show, man. I get some great questions. You guys challenge me. Sometimes I get things wrong. Sometimes I misspeak, and I appreciate that because you guys keep me sharp. K7 Jixer, what's going on, man? You know, you ask me some of the best questions. I'm not gonna lie. Shout out to you, dude. That's why you got the wrench, man. Let me check with our dev when I finish with the video. He had the countdown page working the last time I checked in. And again, I'm not a coder, so Let me see if we got rate limited or something. I'll get that fixed. So weekly time frame, not a whole lot has changed. Still looking for price to be back above that 50% retracement. Also, that is corresponding with the weekly point of control. Closing the weekly above that point of control, looking for a retest of the $4,000 to $4,200 area. And again, until that time happens, still hedged, still going to play the market both ways, and be prepared for when the market breaks the resistance or breaks the range, and then I'll be entering into longer term positional trades. What do I need to see? I need to see this range break. I have this resistance zone right here. I need to see a weekly candle close above this level, or I need to see a daily candle close above this level. That would be a first sign. What do I need to see for downwards movement down into my buy zone right here? 27, 23, 2700, 2300, 2798, sorry, 2245, with the key area there being 2336. I need to see a weekly candle close below support right here. So until that time happens, still range bound, not a whole lot happening. Looking to the daily chart right now, having a little bit of a retrace after yesterday's nice, beautiful, gorgeous pump, coming down and retesting support at the HVN, also the point of control on the intraday time frame. Expecting this to hold. If we do end up closing something like a 4-hour candle below the point of control, as I'll get to here in just a second, I will be out of the trade. Again, average entry on BitMEX at 35.30, so still in profit. If we get a close below 3,600, then I'll probably be looking to exit. Now we're testing that area right now, but I do like the test of that area. Let's actually go over to the BitMEX chart. And let's go down to something like the 15-minute chart. All right, so exactly what I'm talking about right here. Price consolidated up at these upper levels, rejected. I do have that previous support coming right around this area, and that point of control coming in right currently around 36.18. If we start closing candles into this range right here, I'm going to go ahead and exit my trade and take my profit. And I'm already hedged. Again, average entry on the short trade. So this is XBT, so I don't have my short on XBT. I'm long on that. I have my short on XBT H19, average entry at 35.80. So this represents my scaled positions. So if we end up closing below that, I'll probably take the profits from the XBT USD long and pump them into the XBT H19 short and wait for the range to break. Coming back down to this area, I will probably open up some long positions. I don't have any limit orders set yet, but that's the short-term outlook for XBT. Just playing the range, guys. Just playing the range. All right. Yeah, that's kind of all. Not a lot, not a whole lot of exciting stuff to talk about. I know a lot of people are screaming, running for the hills, blah, 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 blah. I don't have any confirmation that we're actually going to reject from this range. I'm actually still feeling my opinion, but I don't trade my opinion, and that's why I'm hedged and protected and in profit on both ways, guys. My opinion is that this most likely does continue upwards. That's what I'd like to see. I'd like to see a secondary retest of this HVN if we are actually going to break down. I'd also like to see, let's go to the 4-hour chart. A lot of stuff right there. We do have a diagonal resistance line that I'd like to see retested. Again, we also have that resistance coming in around 37.50. That $3,800 area was the previous breakdown zone. We also have this range right here where there was a lot of aggressive initiation, a lot more volume entered into this zone right here. So I'd like to at least pump up and retest this, at least on a wick, which would be good because that's where my short-term profit targets are as well for the long position. So still in the long, still in the short. I'm all good, guys. I'm all good. Whichever way we go, I'm fine to go. Don't have any confirmation that's going to continue to the downside yet. Again, we do need to close below that point of control and break support right here. Still looking at a potential support resistance flip, which is what I'd like to see for another leg upwards. But again, if we break this range, if this does not flip to support, then I'm going to take the profits from the long, put them into the short, scale into the short, and ride that down. And look to potentially take profits right here, or at least take a little bit of profit and pick up some tentative longs. And if this range breaks, if support breaks right here, this is the level I'm looking at right here, 34.61. If that breaks, then more than likely we're going to range trade right here for a little bit. But more than likely, if this breaks, we're going to retest liquidity down here a little bit below the swing low. That's my outlook. Okay, so getting to Ethereum. Let's go ahead and take that off there real quick. So a couple things that I like and dislike about Ethereum. So when we were right here, I wasn't feeling optimistically bullish. We did form a bearish symmetrical continuation pattern right there. That did break to the downside, of course, and this is why I don't. Put faith in chart patterns, because traditionally this is going to tell you this is going to be a lot of people saying this is something like a bearish pennant. It's not. It's a symmetrical triangle. Symmetrical triangles are chart neutral patterns. They often are continuation patterns of the previous movement. So I know a lot of people were measuring the flagpole and they're like, oh, we got another 20% leg down. That didn't make any sense to me. Why? Because we had support right here. We had support right at this level. And that's why I wasn't really convinced. This wasn't strong support to me when we were at this level. I was expecting another leg down, which is exactly what we saw. We were consolidating at the bottom of an HVN with an LVN right below us. We gap traded through that LVN perfectly, hit the HVN right at previous support. So this is the confluence that I'm talking about. Important key levels to be watching for. Oh. I need some more coffee. Also, the 618 Fibonacci retracement, which is right where we touched down as well. So what do we have? We have multiple levels of confluence here. We have a previous point of control. We have horizontal support. We have an HVN. And we have the 618 Fibonacci retracement. Looks good to me, guys. And that's where we... thanks to Alex, actually. Alex and I composed that Ethereum long trade. Here is the stop loss that we imposed right here. And we did hit the last take profit target of 124. Again, the numbers are a little bit different on MEX, but it's all good. So what do we see now? We see that a little bit of consolidation, a little bit what would appear to me to be a little bit of a bullish flag forming right here. That's what it smells like to me, as another good trader from the trading group had pointed out to me. Again, not a chart patterns guy. I trade off horizontal support and resistance, and we're seeing the exact same scenario play out. We have resistance right here. We've broken through it. We're pulling back to test it on some decent volume right here. That's some nice volume on the 4-hour chart. Declining volume overall, but good volume for a next leg back up. That key level for me to break is obviously 130.21. And then we'll be looking to retest the point of control at 134.39. If that range breaks and goes to the downside, then this movement is invalidated to me. If this support resistance doesn't flip, then that trade is invalidated to me, and I will just be waiting to see some support form in. But overall, still more bullish than bearish on Ethereum and XBT. Now, I don't have a position in Ethereum at this point in time. I just don't want to be overextended. As I said to the subscribers this morning, you know, I put in 79 trades. So 40 plus 37. Yeah. This month. And I don't want to overtrade, guys. Some people would say that's overtrading, but it's worked out good for me. Again, lots of short-term scalping opportunities. That's kind of the way I trade on the intraday timeframes. You guys are going hard on XRP in the chat, man. Damn, fabricator. Oh, man. I'll do a link, guys. Calm down. It's all good. Hey, Harish Singh. Hey, thanks for the sub on YouTube, man. Thank you. When are you dropping that hedging expertise and you geek on the charts, bro? Nice. Well, I'm talking about Ethereum, man. So, XBT USD, hedged, long and short. Don't have a position in Ethereum, man. The last trade that I took on Ethereum was a trade to the upside. And again, just as I talked about earlier, when you're taking trades to the upside, you want to be tentative, you want to be speculative, you don't want to set long-term targets. So again, people looking at this would have done this. People that are not taking the range into account or taking the market into account, in my opinion, would have been looking at take profit targets like this. They would have been saying, all right, so I'm going to buy here and my targets are going to be $140, $134, $149. Yes, we've hit support. We're going to get a V bottom all the way up, full retracement. No, man. Can that trade work out? Yeah, of course it can, man. But you want to take profit at your first level of resistance is a good rule of thumb. So taking profit right here at 122, good idea. Again, we did put in a take profit level. We run the point of control at 124. That worked out quite well. Actually, when a trade hits take profit 2, hits take profit 3, you just have to be happy and satisfied with your trade. You did good technical analysis, but that's always why you want to have an initial take profit level at your first area of resistance. What is your first area of resistance? Previous support. Right around that 120 to 122 range right there is where you do want to be taking your initial profits. And that's the trade. That's a profitable trade. You're buying at support. You're taking profits at your first level of resistance. Right now, I don't see any need to be in an Ethereum trade unless I see something pop up. Because again, the market that I like to trade the most is going to be XBT. So the same application, if you do want to be, if Ethereum is your coin of choice and you're playing the range, then, and again, it's a little bit different. Ethereum a little bit different than XBT right now. Then I do recommend the exact same strategy. You've got your resistance, you've got your support. But if you look at Bitcoin, Bitcoin has had more resistance and more support. It's a cleaner chart. It's a cleaner chart. You have better established support and resistance. You have better horizontals. You have better diagonals. You have a more firmly entrenched range. Whereas Ethereum looks more like, a bottom, a parabolic movement, and then a retracement. You haven't established a strong range yet for Ethereum. You need to take some time. Let's get over to Ripple. Let's delete that line. And we're going to hold on to this trend line for now because I want to see if it rejects price. So here's the thing about XRP. I've got our strongest support coming in right around this level, around that 7,000 Satoshi level, okay? So that's a big drop from where we currently are. Now, I'm currently net short on Ripple, okay? I took a stab last night at, actually not last night, but yesterday at a long position. Did not end up playing out the way that I wanted it to. So I took a 1% loss on that position. But if we go over to the, I'll show you guys. Excuse me. So I know what people are going to say, like bullshit, but it's not bullshit. You guys are free to go look at the tracking sheet. Ask any premium member if you want. The trade for XRP-H19, let me clear up some of this stuff right here for you guys. Sorry. The trade for XRP-H19 was entries at 94, 96, 98. So this was when we posted the short entry right here. Got fully filled right there with our average entry right around here. And we're still in the trade. So what I need to see to exit the trade, since I'm already in a profitable trade on the XRP short, what I need to see is I need to see that point of control get closed above. I need to see that point of control get closed above. If we close above that point of control, then I'll take profit on that trade and potentially look for a long position, especially if we consolidate at that level. But right now, there's no reason to exit a profitable position, in my opinion. But there are some things that look positive for XRP in the long term. We're around the level of previous support. All right, so we can expect a movement off of that. As you can see, we did get a reaction from testing support. Unfortunately, we have broken the ascending supportive trend line. And generally, when you see a movement like that, a lot of people are pattern traders. A lot of people are looking at those trend lines like that, and they're looking for movements down. So based upon Alex and mine's analysis, What I expect to see here is a bounce actually on XRP. I expect to see a bounce. I expect to see a retracement of this position because we have come to a level of support. Now, we might not bounce right away. We could retest this support level right here, previous consolidation period. This level hasn't been tested, and there's been liquidity plays to the downside right here. So I don't expect this level to break right now. But unless XRP is able to come up here and close above this trend line, more than likely it gets rejected from it. So XRP looks in a good spot to take a bounce. It's at... It's at that 382 Fibonacci retracement level on this entire parabolic movement. And I dislike taking this into account, but unfortunately, because this price level is in here, bots, algos, traders are going to be looking at it. That means I have to look at it too, even though it's ugly. But this is crypto, man. This is the life. This is the life we've chosen. Liquidity drink. Chris Daniel says XRP 1% is a lot to lose with leverage. So the XRP BTC was actually a spot trade to hedge against the leverage trade, and you're calculating P&L wrong, man. It doesn't matter what your ROE is; it matters the position size, loss or gain. So whenever I enter into a position, I'm willing to lose 3% of my portfolio. That's the way you do it, man. Nothing comes for free, bro. So no, 1% is not a lot to lose. It doesn't matter what leverage you take. It matters the position size that you take. So yeah, if you take a massive position size that can blow out your account with max leverage, then yeah, but who does that? Not me. Anyways. I typically stick to like 5x leverage. Sometimes I'll do 10x leverage. I'll do 10x leverage if I'm overextended, or if I've got multiple positions open in the same way and I want to preserve my capital. So I'll be obviously trading a smaller position size relative to what I would normally trade. Or if I want to trade the same position size, that's when I would use a larger amount of leverage. But it doesn't matter. The leverage doesn't matter. ROE is misleading. That's why I calculate my profit from profit size, not ROE. Because if you throw on a 100x leveraged, position, and price moves up, 1%, you're gonna see a massive ROE. And I see people post that shit all the time, dude. People just post their ROE when they're showing their BitMEX trades, and that's so misleading, dude. It's a fucking scam, because they're not showing you their capital, they're not showing you their leverage. They're not showing you their strategy. They're not showing you their potential loss if they would have lost and how that would impact their portfolio, their account balance. That's not real trading, man. That's gambling and potentially getting lucky. Like, oh man, like I made out like a bandit, but I have no strategy to maintain my wealth. It's if you want to be a profitable trader, technical analysis is not the crux of how I'm able to be profitable. Risk management is. Money management skills, wealth management, diversification, hedging and long-term positions. Again, what I talk about on the show, I talk about trading because that's what I do for a living. I don't often talk about my investments, what I'm doing to manage my capital, what I'm doing to manage longer-term positions, how I'm scaling into positions, what other markets I'm invested in, what other allocations of my portfolio that are diversified into different aspects, into different ventures, because that would be an entirely different show. Anyways, so XRP BTC. Sorry, I get diverged sometimes. All right, so what do I need to see to take a position on XRP BTC? Well, I took one. It didn't work out for me. I just didn't like it. Again, was squirrely with the position, which I think totally has the right to be. So let's actually get in here to the daily chart. So we've got daily resistance coming in right now around 90.97. We closed the daily candle above that. I feel pretty good about it. We've got a pretty shallow area of the volume profile coming in right above that area. If that does happen, I could fully expect at least a gap trade right here to 92.97. That's a 2% trade. You'd be putting in your stop loss right below the candle, right below the low of the candle that actually breaks the range. If you do end up closing the daily above that, we've got that Darth Maul candle right now on the daily, indecision doji, push back down to retest liquidity. So let's actually go to the 4-hour chart and see what this thing looks like a little bit better. So yeah, a rejection from previous resistance. We've got this nice pump movement. We've got this nice upswing right here to retest the previous point of control. Just as we were breaking under that ascending trend line, that was a fake break, and then a fake break in, and then the continuation to the downside. So this actually looks like a confirmed kill, honestly, on this descending trend line. We've closed daily candles below this level. Fully expect to see an attempted bounce from this level. Again, 92.97, potentially even 96.92. Now that's a honker of a trade. That's a good trade right there. That's a 7% trade. But if we end up breaking support, the next level that we're going to travel down to is going to be 87, around the $8,700 area. This is our previous support. Hasn't been retested after the first retest right here. We have consolidation right here and a big spike on the volume profile. A lot of consolidation, a lot of accumulation that took place at this point in time. A lot of buyers that we would expect to defend their position when price comes back down to this level. More than likely, we see wick plays down here to test liquidity. As we see stop loss hunts. We see 2 stop loss hunts before the movement back upwards. Well, excuse me, this is not a stop loss hunt. That's massive market selling. That is bots triggered. This is a stop loss hunt where you're putting in support, you're consolidating, you're in clear accumulation, and then you get a classic Wyckoff spring, and then price moves up. So double test on support right now. It seems fairly weak. We're closing lower, honestly, on that daily chart than this level right here. So the expected bounce, the play that I would get off this is wait for that 4-hour close above 90.97. Look to take profits at 92.97. As soon as that happens, update your stop loss to 90.97. Then you could potentially look for that play up to 96.92. But until I get some confirmation, I'll be looking at the futures chart right here. Until I get confirmation with a 4-hour candle close above this point of control right here, as I say, stop loss of close above, that will be my exit from my short position. So that level on BitMEX is going to be 92.80. If I see a close above that, that's going to be my leading indicator for spot price. And I'll be more confident about taking that spot trade. But it's risky, it's tight. I'd much prefer to wait and play a little bounce when price gets down here to a previous support level. And ultimately, I'm looking at this area right here. We've got this area right here. This is actually the 50% Fibonacci retracement of the entire movement. We also see a previous point of control and a volume spike right here, previous consolidation area where we had some accumulation taking place before a nice 12% jump to the upside. So that level coming in right around 79.19, you can expect a little bit of a play, perhaps a 6 to 7% play off that to retest resistance, to retest the breakdown zone before the movement back down here to previous support for me coming in around that $7,000 area. So this is the area that I'm keeping my eye on and where I'd really like to see price go down before I actually take another stab at a long position on XRP, at least for a long-term trade. All right. Let's check out that stinky linky. So is leverage necessary to use? No, not at all, man. Leverage is optional. Leverage just allows you to take a larger position size with less margin. Margin is misleading. Or excuse me, leverage is misleading. Man, look at that strong, bad motherfucker that Link is, dude. As I said, Link gives no fucks about the bear market, dude. Up about 63% from its previous swing dip. Now, I know what you're thinking. Bad time to be buying Link, guys. Again, you do have to wait. I'm not saying that Link's dead. I'm not saying that Link's dead. I've been overly negative on Link. Again, but the last time that people were really interested in Link, we were right here, I believe. Yeah, we were right here. I was charting this descending trend line. This was back toward the beginning when I really started doing the daily videos back in November. And people, I said the exact same thing, guys. Looks like a good time to sell Link. We put in almost a 40% retracement of that movement, and then we consolidated down at these lower levels. Right right where I said, right at support. Right at support where I said, if we start trading below this area, you need to be cautious. But guess what? That area holds as support. Previous resistance, as we see here, resistance, 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 broken through, pulled back and tested as support, and then off to the races. And then when you break a previous high, that's a beautiful movement right there. You break a previous high on a very nice strong candle. You get a nice pullback to retest resistance as support, and you're off again to the races. Now, you want to be waiting for that next same thing. And I did have these higher profit targets plotted out for Link. Let's actually go ahead and clear up the chart here a little bit so we can take a better look at those. So let's take our last swing movement right here. Okay. All right, so we've hit that negative 618 retracement, or excuse me, extension of the entire movement from the swing high, from the swing low to the current swing high. We don't know what the current swing high is yet because we have not posited that in. But you can just see clearly here a market. So you have, again, I hate doing this Elliott wave bullshit, but like, you know, you can see like 1, 2, 3, 4, 5, whatever, like A, B, C. I don't know. It's all crap. But all you do is take a fib retracement of that level, put in your negative fibs, and you can see that negative 618, fantastic area to keep your eye on. Your next level above this is going to be 1581. If you're looking for a full extension of the entire cycle, is 1748, guys. So when you have a parabolic movement like this, when you're breaking new all-time highs, again, it's just like with Bitcoin. We talked about this earlier. You have your profit-taking levels. What you have here is you have an extreme explosion of volume right here. You've got an extreme explosion of volume right here, but you have a divergence in volume as price is making higher highs on lower volume. Let's take a look and see what the Fisher is doing at this point in time. Let's check this bad boy out. All right, so you've got bullish confluence. You don't have any bearish divergence yet. You did bottom right here. This is a great bullish sign on the daily chart right here. Where the Fisher bottoms above the zero line, that is a very bullish sign that we are staying in the positive wave cycle. Right here is your call sign when price crosses the zero line. You get the sell signal right there. That would have given you shit. Let's see. So the Fisher crosses the zero line right here on this candle. So let's say you enter on the close. You had made a 40% trade off that in one day just using the Fisher crossover strategy right there. Fisher bottoms above the zero line, very bullish call sign, no bearish divergence. So again, when we're dealing with parabolic movements, when we're dealing with breakings of all-time highs, it's very difficult to start calculating metrics. Why? Because you have no resistance to go off of anymore. You have nowhere to go. It's very easy to calculate take profit targets when you've got resistance. So the only other metric that I know of that I use, that I implement, is Fibonacci extensions. So 618, kind of a critical level to keep your eye on. It'd be nice to see a pullback from this level, especially if you're wanting to get in on Link. But I'm not going to lie, guys. When I see shit like this and I see the overall market, like I'm still super conservative, man. I'm still a super scary motherfucker trader, dude. And I just prefer to trade what I know and how to be profitable. Because when you're looking at stuff like this, it's like, fuck, dude. You're going to have so many people FOMO into this shit, and they're going to just get tanked, dude, if price dumps from here. Because motherfuckers are going to take profits. It's pretty simple, man. Hit that 618 extension. If we're not able to, let's see, the daily is struggling right now to close above it. The next level that we're looking for is that 786. So all you can do, man, is trade the trend. All you can do is trade the trend. Right now, you've got, let's go ahead and clear these lines off the chart. And we'll look for some confluence on this beach. So let's take a fib retracement of this recent movement. Hey, Krillin18, thanks so much for the sub on Twitch, man. Or excuse me, the follow on Twitch. Highly appreciated. And let's see, Julian Caps, thanks so much for the sub on YouTube, man. Thanks. Welcome to the community. Dark Slayer 469, dude. I'm not in Link, bro. Chill out, man. Actually, like the entire fucking last 2 months, I've been like, Link looks like it's topped, you know? Link just continues to make me look like an idiot. So it is what it is, man. I don't fucking shill altcoin bags, dude. Make sure you get your story right, dude. This is not that channel, man. I don't do what 90% of people on crypto Twitter do. I'm extremely bearish on altcoins, all right? Sorry. But I do take offense to that, man. Check your, like listen for more than 10 minutes, dude. But listen, when you're getting a parabolic movement, you do expect for price to continue going up. You have to trade the trend. So you look for pullbacks to enter onto. So it would be a pullback on this level. You have previous resistance, which could turn into support between your 382 and your 50% Fibonacci retracement. That's this area right here. It's about a 10% area to get into. What's that mean? 10% stop, smaller position size, okay? Where would you be setting your stop loss at this level? Right below that 618 Fibonacci retracement right there. You've got previous resistance right there and previous support right around that area. If that level doesn't hold, then more likely you're going back down to retest your accumulation zone right here, where you do have an HVN coming in right here. So that's a big 50% drop, guys. Be careful. Oh my God. Yeah, man. Your best strategy when you have a situation like this is to look at, again, I always look for big volume spikes to take profit on. That's exactly what I see right now. This would have been a great opportunity to take profit. Then you've got an opportunity to re-enter. Again, right here as well, you see a nice pullback. Price breaks resistance, good opportunity to enter. You're going to know if it's an SFP immediately, which is a swing failure pattern. If price pierces the previous high, if price pierces the previous swing high, puts in a slightly higher high, and then immediately rejects. Well, your trade's been invalidated. It's cool. But if you've been trading Link this entire time, that last trade at the end when the trend bends, you're not going to lose that much compared to if you've been trading it the entire time. So I don't like buying tops. I don't like buying big volume spikes. When I see big volume spikes, just like I see here, I expect price to retrace a little bit. And the levels to look for re-entry or to look for support to hold are going to be 11,979 and 10,885. Stop loss on that below that 618, probably around that 95.50 level. Sounds good to me. That's previous resistance, previous support. If that level doesn't hold, then your next level to be trying to catch a knife. Well, I mean, if that level doesn't hold, I mean, that's your fib retracement. That's your entry level. If that level doesn't hold, the next level to keep your eye on is between that 7307 and the 8234. But I stopped catching knives. After the first knife catch, I don't catch knives. I wait for confirmation that price is going to trend back up. So just areas to keep your eye on. The next level below that is going to be your point of control and previous resistance and accumulation down here, coming in around 5624. So sorry, guys. I'll keep looking at Link, and I'll keep saying you guys should sell. I'm going to feel like, what's that fucking dude's name? Noriel Rabini. Noriel Rabini talking about Bitcoin when it was like $100, you know? Oh, thanks, guys. I appreciate that. Coming in to defend against Darkslayer. Just went all in. You motherfuckers are crazy, dude. Oh my god. Yeah, man, we'll take a look at Dash USDT. You guys. Hey, Johnny. How do you know where accumulation zones are? Yeah, so long periods of consolidation where price moves upwards after that consolidation period is accumulation. Long periods of sideways movement where price moves down is distribution. So you're looking for those key areas. You can identify them from volume spikes on the volume profile. You can identify them from generally low periods of volume in your traditional volume indicator, or you can actually identify them when you have a low period of volatility and then you start seeing an increase in volatility, as we see right here. So this is an important level for Dash USDT for me because we've got a big spike in volume around these areas right here, as we see right here. So a big relative to this zone right here and relative to this zone right here. This zone was important. This zone was a very tradable zone. And this zone appears to be a very tradable zone as well, as we can see with the volume. Now, overall, the volume does seem to be diminishing a little bit. There are bigger pumps in volume on daily candles, as opposed to the volume being more evenly distributed throughout the area. So what that really means is that this was a more honest knife catch. This was a more honest trade. A lot of individuals started accumulating at this level. Whereas we have more of a consolidation period right here where price is ranging. We've moved up. We're on the retrace back down. We're looking for support to hold. Trading below the daily point of control. Let's see what the Fisher's doing. Fisher below the zero line as well, moving to 2 standard deviations oversold. Let's see how well 2 standard deviations has sold as a bottom. Good there. Not good there. Not good there. Not really good there either. So looking at that -4 standard deviations, but when you get a big parabolic movement down like that, when price is trending strongly downward, oscillators are not going to help you out so much. But seeing as price seems kind of range bound right now, the oscillator might help out just a little bit. So I'll keep my eye on this. I'm going to actually wait for the daily cross up before I'm really bullish about this. That would be indicator 1. Indicator 2 for a scale in position would be a daily close above the point of control right there, and your HV and resistance. That's coming in around. Let's zoom in a little bit. Dun, dun, dun. Sorry. Daily point of control coming in around $82.94. Let's just look at this area of the market. Point of control coming in around $79.90. 79, 82 bucks. That's the area that you want to be looking for daily closes above. Let's go look at more classical metrics. Excuse me. Yeah, see, so this is an area of distribution, right? Looks like a bear flag where you have a nice movement downward. Price contracts in an ascending range, very tight contraction, no break to the upside. And then when you break that range to the downside, again, you're going to get taught to measure the flagpole, but I don't like to do that. What I like to do is I like to either measure right here. Look at that. I like to measure the range and use Fibonacci extensions to the downside to measure potential downside targets. Again, 1.272, 1.414 I find to work very well. Alternatively, if the range breaks to the upside, then what I'll do is I'll use 236, 382, 0.5618 to the upside. Simple as. So all right. So you've got current resistance on your daily time frame coming in around $73. Price consolidated below that level for a little bit after this nice, strong, bearish engulfing candle that really just wiped out everything, which is what you'd expect after you see a downwards movement, ascending price contraction, and then you have the confirmation. Again, the way to actually trade this, depending on what platform you're trading it on, this is Dash Tether Bittrex. This is not actually the platform that I wanted to look at it on, but whatever, my bad. I meant to look at this on... Non-linkers are not going to make it. Oh, shit. What's up with Tether versus USD pairs? Can we see your fib settings again? That shit is on steroids. Yeah, no problem, dude. You can screen capture this. Again, traditional settings, 0.236, 382, 0.5, 618, 786, 886. And then I just do the exact same thing, negative. And then I also use 1.272, 1.414, and negative 1.272, negative 1.414. And then there's many, many, many different applications for fibs, as I've already demonstrated in this video. So if you're looking at potential take profit targets on parabolic movements, you can use your 1.618, your 2.618, your 3.618. Those are tried and true methods. Tried and true methods that have done very well for traders. Over the eons. Damn it, I'm out of coffee. All right. So here's my analysis of Dash. We're really not doing a whole lot. The dominant trend is to the downside, so you have to be careful taking long positions on Dash. Hey, AlexX87. Hey, what's going on, man? Thanks for the follow on Twitch, bro. You have to be careful with Dash USDT, man. The reason why is because it's not doing that much. The volume isn't there. You didn't get any follow through on that last pump. The volume was very weak on yesterday's candle. You have today's daily candle that has already wicked down for a 50% retracement, basically, of yesterday's bullish momentum. So you just completely wiped out your gains from yesterday, essentially, unless you happen to buy at the bottom, which would have been your 786 fib retracement. If you would have front run that by a few cents, you would have done all right. But again, 786 Fibonacci retracements, they're speculative, man. They're great when they work out, but they're just not reliable. They're just not reliable when they hit. Again, that's when I'm looking at retracement moves, when I'm looking at areas to enter, I like the area between the 382 and the 50% retracement, stop loss below the 618. When I'm looking at nice, healthy bullish moves up and I'm expecting a retracement, that's the zone. That's where I like to enter. And then I look to find confluence again with the volume profile and with horizontal support and resistance levels as well. It's just looking for beauty and symmetry in the chart, man. It's just looking for repeatable, predictable patterns. So I wouldn't do a whole lot with Dash right here, man. If you're able to close your daily candle on some good volume above that $73 current resistance, then you can enter a small position. You can enter a small position. Where do you want to be taking profits? You probably want to be taking some profits at your first area of potential resistance. That's that $80 zone. Yeah, I would front run that. I would front run that a little bit. In fact, I'd probably say 77 bucks. Maybe you could be ballsy and say 78, 79, but I'd front run that $80.41 quite a bit, man, which is your current point of control on the daily chart. Now, if you're able to close above the point of control and consolidate there for a little bit, well, then you can be more positive about the upswing. You want to be careful of a stop loss hunt whenever you're entering into a period of consolidation if you're going to continue upwards so that people can grab liquidity. But if we're able to close above that $80.41 area, start to get a little bit more positive. Then we can start looking at some more longer term targets. So current play right now, absolutely no play until we actually get some confirmation of a bottom. If we break down from this zone, if we break down from this current little consolidation zone that we've been stuck in for the last 3 days, let's see, the next area of support that we have coming up on the volume profile is going to be the 62.23 area, and that's also confluent with the 886 fib retracement. But often, if we're going to come back down and retest support, I would not be surprised to see a liquidity grab. So for that reason, unless you're going to have buy orders spaced right here and using a multiple of ATR, so let's actually see what ATR is going to tell us, $6.48. Close enough. What's the low of this candle? 57.05, let's call it 57.05. Minus ATR, which is 648. 50.57. Yeah, like I said, pretty close enough. Horseshoes and hand grenades. trading sometimes, believe it or not. So when I like to play for liquidity grabs, that means having some buy orders spaced right here, right below previous swing low supports. Stop loss 1 ATR away from price. You can also be a little bit riskier if you want, depending on, again, the wider your stop, the smaller your position size, the tighter your stop, the larger your position size. All that matters is that if your stop loss gets hit, you lose a predetermined amount of money relative to your portfolio size. So that's the way I play Dash. Wait for a bottom, wait for support to form. Again, next support level that I do see coming in is at 886, also congruent with the also congruent with a volume spike on the HVN right here. Previous consolidation, obviously your previous bottom. Be prepared for a liquidity grab for wicks down to this area if we are going to find support at this level again, which would be a third tertiary test of support. I do like to take plays on a tertiary test of support as well, as opposed to the fourth, which I often find to break more violently to the wrong side to give me a fake break if it pulls back into the level. And then your stop loss is going to be around $50.57. That's how I play Dash USDT. That's your potential knife catching support area entries. If you're wanting to enter into a trend upwards, again, you need to wait for a few things. You need to wait for a daily candle to close above $73 to maybe buy a little. You need to wait for a daily candle to close above $80.41 to buy more. And then you can look at your upward targets above here. Yeah, if you're able to break this resistance right here, if you're able to break, let's say 95 to 100 bucks, you've got some smooth sailing, man. You've got some smooth sailing. Not a lot of resistance, maybe until this aggressive initiation zone right here. That's a negative 618 extension coming in around 130 bucks. If you're able to break this range, LVN right here, buddy. So you got to break resistance. We haven't even had a secondary. We haven't had a real secondary test of resistance. You need time and distance in between tests of resistance to gain momentum to be able to break through them. Time and distance. Hey, Tom Tupaz. Hey, what's going on, man? Yeah, that is the volume profile. That is the volume profile visible range. That's exactly what it is. Hey, Michael. Yeah, I agree with you. It's a lot, man. But each level tells me a little bit of something. I don't trade all of them. And I don't do what traditional traders do. I don't just use the 618 and 786. And that's it. And, you know, hey, if that works out for them, that's absolutely fantastic, man. But, you know, I trade what works for me, man. But thank you for your input, bro. All right, so that's all I got on Dash. Hopefully that works out for you. XVG BTC. Let's take a gander. Yeah, I kind of look how XVG looks right here, man. I'm not going to lie. And I'll tell you why. Look at where we're at. We're in a consolidation zone. That consolidation zone stretches really all the way back to August, where we put in a nice bottom. We put in a nice hammer candle on the daily. We come up, we get an automatic reaction from that level. And this looks like some pretty good classic accumulation to me, where we test resistance. We test resistance here. We test resistance here. There's not a lot of time and distance in between these tests of resistance, so I'm just going to consider this for the purposes of this analysis as a secondary test of resistance, not a secondary, tertiary, or quaternary right here. So we put in a nice bottom with a good reversal candle right here. We enter into a period of consolidation on some decent volume right here on the buy side, much more volume to the buy side than to the sell side, honestly. We establish a new point of control. So we have the most active trading occurring at this level. And then what do we see? We see a nice spring, break of support, liquidity tapped into, automatic retest of the point of control. And now we're seeing that same consolidation as we're forming higher lows and retesting resistance once, twice, 3 times, continuing to move up. So yeah, I actually like the way this looks. We've already had a spring. We've already had a test of liquidity. We've already pushed out all the traders that entered at this level in the market because they would have had their stops below the swing low. We've already had them tapped into. All the liquidity has already been tapped into. We've got some very nice bullish volume coming in here on the daily chart, stretching all the way back to November. Verge looks like it's getting ready to do something, man. I'm not going to lie. I need to see some confirmation of it. The first confirmation that we need to see is we need to see, from, in my opinion, we need to see a daily. Let's just scroll down here a little bit. So, okay, good. That's pretty congruent. Need to see a daily candle close above this current point of control, this lower point of control at 208. I'd actually like to see a daily candle close above 226 as well. That's, in my mind, going to give us confirmation. Especially if that, and the level needs to hold. We need to see not only a break of resistance, but we also need to see a support resistance flip. That's going to be your classical metric for entering into a trade. But yeah, looking at the volume profile, man, getting above this level, don't got a lot of resistance, man. You don't got a lot of resistance. You've got strong resistance coming in right around 812. That's where a lot of liquidity would be in the market. A lot of liquidity to the sell side. All this throughout here is going to be fairly easy liquidity to break through if we have accumulated enough momentum to continue onwards and upwards. Now, yep, that's going to be congruent if you front run it. So front running that previous point of control and front running that 50% Fibonacci retracement is going to be putting you in this level right here. Let's see if there's some confluence with that level going back with horizontal support and resistance. All right, well, let's just be real about this. Not so much confluence right there for horizontal support and resistance. More this area right here for aggressive initiation, aggressive selling, aggressive initiation, aggressive selling. Makes sense to me. So let's front run pools of liquidity and look for, and I'm being very optimistic here on Verge. I'm being very optimistic, and I'm fully aware of that. Just bear with me here, guys. So what I'm doing right now is I'm setting take profit targets by front running pools of liquidity. I'm also front running heavy pockets of the HVN. Boom. I like that. All right, let's go to average true range, 14 Satoshis. So I don't think there's any need to go 14 Satoshis. Yeah, that's good to me. 154, right there. So that's one ATR on the daily chart away from the swing low. And this is going to be an aggressive entry if you're looking to enter at these levels and you're predicating your trade on the break of resistance. This is not the right way to trade, although it does have a higher risk to reward ratio. Again, so I've charted out daily targets based on Fibonacci retracements of the last big market cycle. So if we wanted to be more conservative, we can do this a different way. If you wanted to be more conservative, you could do this a simpler way, just by using extensions from the last swing movement. So swing low to swing high, assuming that the range breaks here at 0%. For me, really, that range is even a little bit lower, actually, right here, previous consolidation, previous breakdown zone, and current resistance. That level again changes a little bit, but 218, 208. I think the first thing I said was 208, 226. So that's going to give you this area that I like right here. That is a shallow pocket of the LVN. That's also right at previous resistance. Support turned into resistance right here. That level right there. You could front run that a little bit if you want and bring that down if you wanted to be more conservative and target this area between the 236 and 382. But traditionally, I target between the 382 and the 50%. If you get above your 618 right here, you can expect a wick. Well, hopefully, ideally, you can actually expect a wick to that first long-term target, 315. And if you're able to get above that 618, well, you've made it above all the resistance in this zone right here, and you can start looking at higher targets. I'm going to sneeze like a motherfucker. Nope, didn't come. So the breakout way to play this would be to wait for a daily candle to close above this range right here. And then whatever candle breaks the level, again, you can enter aggressively on the close of the candle that breaks the level. Just be prepared for a little bit of drawdown, ideally. And then you set your stop loss below the low of the candle that breaks resistance, either right below the low, at the low, or 1 ATR below the low. I prefer the third option, especially with the cryptocurrency markets. And then you're looking for that support level to hold. You're looking for that support resistance flip. And then there you go. Looking at profit-taking targets again. You can front run this area too if you want. So there's a pool of liquidity right there. There's a pool of liquidity right there. Previous resistance. You can front run that area. That's fairly congruent right here with that 236, 38, or excuse me, the 382 to 50% zone of the extension of the recent swing movement. A lot of ways you can do it, man. But long term, when I see some nice consolidation like this, long extended period of accumulation, seems to me more bullish volume than bearish volume throughout all of this. Let's see if something like ADX. No, that's not what I wanted to look at. I just wanted to look at, what the fuck? There we go. Yeah, let's see what the DMI tells us. Yep, so we've got the DMI below 25, so we're consolidating. And yes, we see that bullish momentum is much higher than bearish momentum and in a descending pattern, but overall on the rise as opposed to the bearish momentum, which has just really fallen off the map. So looks like Verge could be gearing up to do something quite nice here. But again, everything's predicated on Bitcoin, guys. But a lot of these altcoin charts that I've been looking at lately are confirming for me technically the reality that I don't think that Bitcoin is likely to break 3K. It will take the rest of the cryptocurrency markets with it, at least in the short term. I don't see Bitcoin breaking 3K in the short term. I do have downside targets that I've talked about extensively in the videos. But again, I need to see confirmation of which way the market's going to go, guys. That's the most frustrating thing that I know people hear, that you actually require patience to be a trader. If you guys want like a brief insight into what my life looks like most people think that trading looks like, I don't know, like an 80s montage or something like that, or like a 90s montage or something like that. In reality, like a lot of hours are spent doing analysis and waiting for like 5 minutes of volatility. It's just like dating. Hey, Rebel Onair, thanks so much for the sub on YouTube, man. Appreciate you, bro. Hey, so Hamid, yeah, so there is a rule that if the government is shut down, the ETFs do get approved automatically. I don't think that that's going to end up happening. There's ways around that. Hey, Natural Medicine, thank you so much, man. You probably get asked this a lot. Hey, I do. What's my opinion on BTC in the next few months? Again, and I know this is frustrating for a lot of people to hear, man, but just looking at the technicals, we're range bound. We're range bound. So the best opportunity, the best position, in my opinion, is to be tentative with your long plays, to be looking for opportunities to put on your short plays because the overall impetus is to the downside. But I'm hedged. The only positions that for XBT positions, long XBT USD, perpetual swap, short XBT H19. And when the range breaks, I'll scale out of the losing position and scale into the winning position. Hey, thank you, Dr. Fasawana? Dr. Fasawana? Thanks, man. I appreciate it, man. I think my phone is clicking and shit. Hey, thanks, JE Airplane. Thanks so much, man. Hey, Eli, back. What's going on, man? Are alts the better play short term? Depends on the situation. Depends on the altcoin. Verge, like when I see a chart like Verge, this looks pretty nice to me. I'm not gonna lie. But the situation is that we're not sure when accumulation is going to end. This looks like it's a good setup. Looks like it's situating to do something. But I want to see confirmation before I jump on something like this, because the potential is that it can just continue going sideways for a long time, just like Bitcoin can. The markets can go sideways for a long time. And that can get a lot of people to capitulate just out of boredom. A lot of people get tired of playing the range, getting whipsawed out, wicked out of their positions. So it depends on the alt. It depends on the alt, man. I like USDT pairs much more than I like BTC pairs, because I don't like being exposed to that direct volatility unless it's in a position that I want to trade. Otherwise, you have to do a lot of annoying calculations to determine your risk, like the USD depreciation of Bitcoin. If you're trading an altcoin pair, maybe the altcoin goes up 7%, but Bitcoin goes down 3%. How do you calculate your profit on that? Zcash and Litecoin. Let's take some looks, guys. And then I'm going to head. Yeah, sorry, it's Zach. A couple things, man. Looking at Zcash, I mean, you're at the very bottom. You're sitting on support. You've had a long period of accumulation since really starting at the beginning of December. Market really hasn't really done a whole lot to impress me. You've moved the point of control all the way down at the bottom, and you do have some good, nice accumulation volume coming in, as opposed to anything. Like, just look at the volume. There's really nothing here. Or excuse me, there's really nothing here. There's really nothing here. And you're seeing the volume start to pour in right now. A couple things though, man. The fissure looks like it's topping below the zero. Very bearish sign for me as far as the wave cycle is identified. You're below the point of control on the daily chart as well. But it does look like a potential area for accumulation. Again, this is a tertiary level of support. But you just got to be honest, like, looking at this, man. Like, all these altcoin charts like look rough, man. Like, when you're accumulating at the very market bottom, and Bitcoin, which is the coin that moves the market, is range bound, like, you don't have any indications that we're going to go in a bull run yet, man. I know a lot of people are really excited to buy the bottom, and when are institutions buying? When are institutions putting on Ripple? Like, come on, man. A lot of institutions aren't buying Ripple, man. Cryptocurrency is still highly retail, man. Still highly retail. If you guys want to see, like, don't get me wrong, we've got big players in the scene. There are some institutions that play the markets a little bit, but like with maybe like 0.1% of their capital. When you get things like Backed and you get actual listings on the Intercontinental Exchange, you guys are going to see what institutional money can do. Things are going to get a lot cleaner. I'll tell you that. So yeah, man, if we're able to get above that point of control, if that fissure is able to get above that zero line, if it doesn't bottom below zero and actually crosses up above the zero line, it's a nice bullish sign. Let's go take a shorter time frame look, see if we see anything like a shorter term trade on the 4-hour chart. So directional bias is neutral on the daily chart. I'm just going to take the current range into account. Yeah, man. Getting below your HVN right here. So, I mean, you're looking to catch a knife. You're looking to catch a knife. Yeah, I don't really like the way this looks, honestly, man. I mean, it could be, might be, possibly. I don't know. Could be, maybe. That's how I feel everybody thinks about when they look at chart patterns, which is what I'm about to do. Looks like maybe, possibly, could be, might be a falling wedge. But these are my least favorite patterns to trade because they end up playing out like very rarely. So currently, this thing breaks to the upside. You've got short-term targets of 0.01788, 0.18293. You can also target this area right here, bro. Yeah, I don't like the way this looks. I want to see the point of control get above on the daily chart. I want to see the Fisher cross above the 0 line. Or I want to see that pattern break. I want to see that wedge break. Till then, no trade, man. No knife catching. No knife catching. Let's go look at Litecoin. Nice bullish retracement from today's dump, man. I like it. Hey, Eli back, man. Thank you so much for the $5 contribution, man. Highly appreciated, bro. You're one of the good ones. So we're gearing up for something here in Litecoin, man. I like Litecoin. Not fundamentally, but, you know. Yeah, I'm not going to take that. I'm not going to do the chart. I'm not going to chart a broadening wedge, man. But I do see confluence. Obviously, it doesn't take a genius to see the resistance, the descending trend line is being respected. Where do we come down and find support at? Right where we should have, man. Previous resistance. Support resistance flip. We've got current resistance coming in right here. We made a nice play at it today. We made a nice play at it with a nice bullish movement upwards. And now we're retracing above that. So what I'm going to be looking for are a couple things. I'm going to be looking for this trend line to get broken, and I'm also going to look for this resistance level to get broken right here. You can see we've got this HVN, we've got previous support, which turned into current resistance. If we're able to get above and close above this level on a 4-hour candle, and really above this level as well, then I'll be playing this at least. Whoa, 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 what happened? Don't be moving my HVN around. I want to take this market data into account. Yeah, then I'll be looking to play this at least to the HVN. Okay, so that's going to be a 2.56% trade. More than likely, I'm going to have, I would set a take profit target here as well. Let's actually look at a better way to do this. So let's find confluence, guys. Again, multiple levels that agree with each other. There we go. So you got some aggressive initiation over here, and that's also where you found consolidation at these zones. Support turned into resistance. So you've got a high volume node coming in right around that 899, or excuse me, not 90 area, okay, give or take. So that's going to be your first area that I would front run resistance. That's also front running your 382. And then the next area that I obviously have plotted out here, which was previous support, which is now current resistance. Is going to be front running your 0.5 Fibonacci retracement, and you've got that HVN coming in there as well. So resistance level 1 to get over, resistance level 2 to get over, and then you've broken all local resistance, and you're looking at a retest of the highs, if this is able to happen. But I need to see some confirmation before that, because if this does reject, We've already had, again, time and distance before tests of support. So a very quick retest of this support is either going to immediately hold or not hold, but I'm not going to be catching knives, guys. I want to see actual breakout potential. But yeah, I see what you're saying for that support resistance flip. It just hasn't happened yet, broski. Yeah, it just hasn't happened yet. Hasn't happened yet. You're still getting resistance from that exact same area. So yeah, I actually put on the, I'll show you guys. I put on the LTCH19 trade. I closed that out this morning. I just took my 2%. And I'm not going to re-enter it again. So we basically put on the longs, LTC, ETH, BTC, when we hit support on all the major coins. And although I am still leaning more bullishly than bearishly right now, again, hedged, XBT USD, XBTH19, no trade on ETH, no current position on Litecoin. Still short on Ripple. Still short on EOS. We were in those trades a while ago, so there's just no reason to close them. Those were longer term trades, especially the Ripple trade. And I'm in one altcoin, USDT pairing. So until I see some, again, I posted, what I said to the subscribers this morning was, guys, lazy day. Don't see a lot changing in the markets. Need to see some breaks of this range. You guys don't need to overtrade. Just don't get excited, man. Like what do you see? Like, things are kind of range bound. Just wait for something to break, man. And then you trade the trend. Till then, be very careful, man. Paul Castellano, man. Yeah, that's, I feel you. I read that article this morning too, man. It's like old ass news, bro. We knew that. Hey, you guys are welcome, man. Thank you so much for watching the show. Let me just peek at XLM BTC because I've got a lot of people screaming for that. Yeah, XLM BTC is in the, god damn, that's a big ass zone. That's not happening yet, guys. Calm down. Don't get over your skis. Resistance right here, man. Resistance, clear resistance at around 3,300, 3,265. Again, time and space. We have a classic SFP pattern right here where we put in a nice swing high. We put in a little bit of a higher high, and as soon as you close a candle below that candle's open or low, depending on how aggressive or conservative you want to be, that's a confirmed SFP. You're done. You can also be looking on the very, very low time frames to actually be able to catch that. So what do we got here on the daily chart? We've got a secondary bounce off supports, these support levels that I had right here. Stop loss on those support levels right here, as I pointed out, have not been triggered yet. Not in an XLM BTC trade, just point that out there, guys. Pulled back off this nice swing trade, made a nice 618 Fibonacci retracement, and got rejection from there, as well as the current point of control. So no knife catching, man. No knife catching on Stellar Lumens. Looks like it could be, looks like it's got some potential, man. Like, let's look at the longer time frames. You know, and I do like XLM, man. It's in long-term consolidation. It is in long-term. I mean, just look at the chart. When you zoom out, you can just see classic consolidation, a little bit of price contraction. We're coming back down to 1, 2, 3, 4 quick tests on the support level. So unless we V-bottom up here nicely on some good volume, look, we've got overall declining volume. There's a couple nice volume spikes right here. But overall declining volume as we move further into consolidation at the bottom of its range. So for the long-term traders that have a higher time frame perspective, it's not a bad trade. The R to R is a good trade. As you can see, I do have the upward targets right here, and the supply zone, the demand zone stop loss is all the way down here at about 2,660. So if you want to put on a long-term position for XLM, this is not a bad time. Again, you've got the really first, second, third, baby little fourth test. So either, you know, when I see something like this where we're trading, or excuse me, where we're ranging quite nicely, and every time we touch support, we get a nice bounce off of it. In fact, every bounce we get higher highs. So this is our first test of support, higher high, high. Second test of support, higher high. You know, we come back down, we form an ascending trend line. That breaks. That's the clear sign to be bearish. Classically, we haven't broken any. Classically, we haven't broken any resistance zones to give confirmation to the bullish trade right here. Again, look at this very weak sauce reaction off that third test of support. I mean, almost nothing happened, man. Almost nothing happened. I think it was what, a 382, maybe a 236 retracement of the entire swing down movement, and now we've immediately dumped back down to support. So I don't want to be taking any positions on XLM at this point in time. If we can get back above like our first, at least slightly like baby resistance here, where the point of control is coming in around 30.79, then I'll potentially be looking to open up a trade. Really, for me, I want to see current resistance get taken out, coming in right around that 3,200, 3,300 area. I'll be a lot more confident. I just don't see the volume there, man. I just don't see it there. And we're in a dangerous zone. Breaking down below this zone right here, really, I mean, just classically, the next area of support that we have, we've got this huge area, this huge shallow portion of the LVN. If we break down and completely invalidate this upper consolidation range, and this was just long-term distribution, then our next stops are potential knife catch at 21.27, and then current previous resistance, which has not been retested as support at 17.79, guys. So gotta wait, because the downside potential is great, and the upside potential is great, but don't have confirmation on which way to go yet, unfortunately. Gotta wait, gotta be patient, guys. Don't see the potential there yet, man. Yeah, Jeb McCaleb's a beast, dude. Oh, no. My bad, guys. Trupo Bello, hey, thanks so much, bro, for the sub. Hey, sorry guys. I know I got a lot of questions coming in, and I'd love to answer them all, man, but I've been doing this for 2 hours, guys, and I got a lot of shit to do today. So I got a jet, guys. You guys have been absolutely fantastic. Thank you guys again for joining me. I am here live every morning at 11 a.m. Central Standard Time for the Breaking Bitcoin Morning Update. All right, let's get into the end of the show, normal stuff. If you guys have been viewing and you enjoy the content and you want to see me keep coming back every morning to break down the markets for you guys and give my updates on my positions and my outlooks on the market, make sure you hit that subscribe button and the notification bell so you never miss an episode, guys. Again, we're here every morning. I'd highly, highly appreciate it if you guys zoom on over to twitch.tv/crackingcrypto and give us a follow and give us a subscription, guys. We really appreciate the support. Helps keep the lights on around here in the office. If you guys head on over to crackingcryptocurrency.com, another way you guys can obviously support the show is by picking up some wonderful merch available through Spreadshirt. We do get a kickback from the sale of the merch. Again, helps keep the lights on and helps improve the show. Hey, thank you so much, Painkillers, for the follow on Twitch, man. Highly appreciate it, my friend. And if you guys go pick up some merch, let me give you some advice. Go to accessories, mugs, and drinkware. Scroll down this bad boy right here. This is the HODL Cracking Cryptocurrency mug. This is what I drink my first cup of coffee at every morning because it is scientifically proven to increase the profitability of your trades by 80% and your attractiveness by 95%, guys. Scientifically proven. Seen the reports, guys. This is the most marvelous beverage vessel of all times. When Indiana Jones opened the tomb, the Lost Ark, this was what was shining back at him, not the golden fertility god idol. It was this, I promise, man. So go pick that up, guys. If you guys would like to start off January on the right foot and actually if the bear market's been bad to you in 2018, guys, if you are doubting your trading skills, if you want to brush up on good strategy, if you want to get access to an excellent team of support, mentorship, analysts, and fellow traders who can help you determine if your directional bias is right, to make sure if your stop loss is too tight, and to make sure if your take profit is wild or insane, you guys should join the Cracking Cryptocurrency trading group. You will get access to all our trade signals and setups. You will get access to the private Discord, the Members Lounge VIP channel, and the day trading voice chat as well. You'll also get access to your own trade journal that is customizable, pulls data from the exchanges so you can keep up to date on your positions, and you can use that to gauge your performance over time to measure your own equity curve. You get access to my live tracking sheet as well, so you can see not just the closed positions as I show on the stream, but all my open positions, and it pulls data from the exchanges and live tracks them in real time. You also get access to our webinar series designed to teach you from scratch how to be a profitable trader, access to our database library where we have uploaded as traders over everything I've accumulated for the last 10 years, webinars, PDFs, courses, seminars, workbooks, everything you guys could possibly need to help you get an edge in the markets. You also get access to our curated news and technical and fundamental analysis as well. I think that's all. Sometimes we add a whole bunch of stuff. Sounds good to me. Sounds good to me. Consider joining that, guys.
Honey Badger don't care. Honey Badger don't give a shit. It just takes what it wants.
Hey, Choco Trading, man. Thanks for the sub, or excuse me, thanks for the follow on Twitch, man. Highly appreciate it, bro. All right, guys. That's been all for me today. You guys have been fantastic, excellent, awesome, beautiful people. If you guys have any questions, thoughts, comments, opinions, suggestions, sarcastic remarks, and or death threats, pop them down in the comment section below. I do respond to comments, guys. You can also hit me up in the Discord, discord.crackingcryptocurrency.com. Make sure to keep the conversation going on there, man. It's as much about the community as the show, as much about the conversation as the analysis, guys. We all need some support. You can also reach us at contact@crackingcryptocurrency.com. Thank you so much, guys. As always, trade safely. I've been Justin Wise. We'll be back here tomorrow, 11 a.m. Central Standard Time. Cracking Cryptocurrency. Peace out, guys.